Hi YouTube, my name is Saraan and welcome back to my channel, Investing with Saraan. If you're new here, I'm a go-to channel for dividend investing, growth stocks, timely stocks, and much more. But today, I'll let you all understand a crucial asset that people should have in their investment portfolio. So let's get straight into the video.
Come on.
Now, when constructing a portfolio, there are various ways to do so. People can include stocks, bonds, commodities, cash equivalents, and etc. One of my favorite investments to have in my investing portfolio is an ETF. If you don't know what an ETF is, then you come to the right video. In this video, I'll be going through the basics of an ETF, where you can buy one, and much more. An exchange-traded fund, also known as an ETF, is an investment fund that is traded much like a stock. To be more specific, an ETF is a basket of securities where the shares of this asset are sold on an exchange much like a stock. This asset can be bought or sold as many times throughout the trading period within the stock's market time. ETFs specifically have lower fees compared to other types of funds. Their uniqueness allows a range of benefits for investors and their risk tolerance. Much like any other stock you would add to your portfolio, all ETFs are not equal. They all have different benefits, risks, diversity, and purpose associated with their purchase. An aspect of an ETF that people want to know is how they work. In short, an individual company, which could be known as an ETF provider, has a capability to group numerous assets into a basket with a specific ticker symbol. Retail investors such as you or me, or institutional investors such as mutual fund or hedge funds, can purchase ETFs much like stock. These ETFs are only able to be bought and sold during the hours of an exchange, which typically go around 9:30 a.m. to 4 p.m. Generally speaking, ETFs have lower fees than mutual funds. This is a key part of their overall appeal to investors. In fact, in 2019, the average expense ratio for mutual funds was around 0.52%, whereas an ETF's expense ratio was 0.18%. ETFs also offer tax efficiency advantages to investors. There's generally more turnover within a mutual fund, especially those that are actively managed, relative to an ETF, and such buying and selling can result in capital gains. When investors go to sell a mutual fund, the manager will need to raise cash by selling securities, which also can accrue capital gains. In either scenarios, investors will be on the hook for those taxes. ETFs also are more popular in recent years compared to the mutual funds, but the number of available mutual funds is still higher. These two products have different management structures which can benefit investors based on their needs. As stated before, ETFs, much like stocks, can be traded on exchanges and have unique ticker symbols that can let you track their price activity. But unlike stocks, ETFs represent a collection of stocks, which gives a better diversification for investors. Their diversification is what can reduce a portfolio's exposure to risk, but can also limit the portfolio's exposure to benefits. ETFs can also have a general theme or an industry that they focus on. For example, the ETF VSV.TO is an ETF that tracks the S&P 500 that is historically proven to give 10% return every year. Another one includes Tech.TO, which is an ETF that tracks technology companies whether they are part of the US or Canada. Some examples of these companies include Apple, Shopify, and much more. Now, we'll be looking at one of the most important parts of this video. We need to know what the benefits and risks are, and if the benefits outweigh the risk. So, now I'll start with the pros of ETFs. ETFs have a number of benefits. Their biggest benefit is the diversification. An ETF allows an investor to focus on a certain industry, certain type of stocks, or even various types of assets. This allows an individual to be exposed to different assets without having to use as much money and effort to buy the same components of an ETF, but individually. Another benefit of ETFs are their transparency and accessibility. In today's world, anyone with internet access at home can search the price activity and any other metric for a specific ETF on an exchange. A fund's holdings are also disclosed each day to the public. This is not the case with mutual funds, where the activity only happens monthly and quarterly with mutual funds. The final benefit of ETFs are the tax advantages that they have over mutual funds. With ETFs, investors will typically only be taxed when they sell their investment. This is very different with mutual funds, as fees over the course of the investment will incur. Now, let's look at the cons of investing into an ETF. One con that I've witnessed about ETFs are the fees that can come along with it. MERs are not the only fees that investors will have to pay with ETFs. Most ETFs are bought from online trading platforms that require commission fees. There are only a handful of trading platforms that don't charge commission fees. I'll highlight these platforms near the end of the video. A major con or risk of an ETF is an unexpected closing. The primary reason that this happened is that a fund hasn't bought enough assets to cover their administrative costs. The biggest inconvenience of a shuttered ETF is that investors must sell sooner than they have intended, and possibly a loss. There's also an annoyance of having to reinvest that money and the potential for an unexpected tax burden. Now that we've looked into the benefits and risks, we'll see if this is worth it. I personally believe ETFs are the easiest ways to invest and one of the safest. I typically only focus on strictly some stocks that I'm very bullish on, or if it yields a return higher than 10%. I personally do have a couple of ETFs in my portfolio, and in the next video I'll let you know one of my favorite ETFs and the ones I really want to buy. But for those of you that want to invest in ETFs, I'll let you know how to do that. I personally use two online trading platforms, and those are Questrade and Wealthsimple Trade. I personally prefer Wealthsimple Trade over Questrade for ETFs because there's no commission fee to worry about with Wealthsimple Trade. Because when you sell with Questrade with ETFs, you will have to pay a commission fee of $4 or more, and you'll have to pay a percentage when you're buying ETFs on Questrade. This eliminates the cons that came with Wealthsimple. If you also want to buy ETFs with Wealthsimple, I dropped a link down below which gives you an option to receive 10% return for the first $100 that you invested in the platform. I honestly think this is great because the S&P 500 returns the same amount, but that takes a year rather than this taking just a moment of your time. But now that you've enjoyed this video, make sure you punch that subscribe button down below and drop a like. This will help boost my video with YouTube's algorithm and help any investors along the way with their investing journey. It's been Investing with Saraan, and join me next week where I'll talk about the best ETFs to invest in 2021. The comment of today's video was very close, but I had to go with the comment with the most likes on my last video. This was from TT Entertainment with their comment, "I love dividends." If you want to be featured in the next video, comment under this video for a chance. Remember to subscribe down below and to check the end of the video. If you guys want to join my dividend journey and learn some concepts of investing, punch that subscribe button below and drop a like. Remember to click that notification bell so you don't miss any of my videos. It's been Saraan, and join me next time on Investing with Saraan. If you want to learn more about investing, click the videos down below.